Hi, I'm Kerry. I'm a retired financial advisor, and I do this channel to give people advice or share my life experiences in retirement and as a financial advisor in hopes that you can have a better retirement. I subscribe to the philosophy that this is the best part of my life, and so I want to enjoy it and I want to make the most of it. I did some interviews. I did an interview with Steve, who is a on-the-road musician out of Nashville. And as a result of that, I got an email from another Steve, a totally different Steve, who described his retirement situation. And I then followed up and spoke to him on the phone, got some more information, and he's agreed to allow me to just call him Steve, that he wants to share his situation, and then I want to give my input. Steve inadvertently created his retirement. He wants to retire at the end of this year. He's 65 years old. He fell into what we call the three-bucket philosophy of retiring, and that is to have a bucket of money, that is cash, that will sustain you for a number of years, a second bucket of money, which is investments, which will take over after that initial period, and then a third bucket of money that is created through either Social Security or pensions or some sort of subsidy for your retirement. So he's got those three buckets of money. And the reality is that the specifics are he and his wife require something in the neighborhood of $84,000 a year to live currently. They have in that bucket number one enough money to finance themselves for the first 5 years of their retirement. That will get him up to the age of 70, and that's when he wants to retire or wants to access that third bucket of money, his Social Security. And then his wife is 5 years younger, and so at that point, she will qualify for Social Security as well. And so that third bucket kicks into action. So our conversations were, okay, what are some of the things you need to know to manage your first 5 years that could help you even more? I have experienced that in the state of Alabama, if you have an income of a married couple, an adjusted gross income of less than $40,000 a year in retirement over 65, you don't have to pay property taxes. So I did some research for Steve, and in his state, they have a similar law. So as I said to him, as you access bucket number one, manage your taxes. You have a standard deduction. You have, he still has a mortgage on his house, and I advised him to keep that mortgage because any interest that he pays on that mortgage is also a deduction from his gross income. His goal is thus going to be from bucket number one that he needs $7,000 a year, make that adjusted gross income low enough so it qualifies him for not paying property taxes. Now, in his case, he said that would save him about $2,400 a year that he wouldn't have to pay on property taxes. That's not a big amount, but it helps towards the ultimate goal, and that is to have a prosperous and good retirement in front of you. Now, his wife, being younger than him, got laid off as a result of the pandemic. She worked for a large company, and she was an event planner, and as a result of the pandemic, they didn't have events, so she got laid off. So she is now qualifying for the Affordable Act program. And also in there are better benefits if he keeps his income below $40,000. Also, if he keeps his income, his adjusted gross income under $40,000, he doesn't have to pay capital gains taxes as he takes money in those first 5 years out of his bucket number one. And bucket number one, again, to refresh your mind, is either brokerage accounts, non-qualified brokerage accounts, and or cash. Now, he was planning on actually converting some of his IRA and 401k money into Roth IRAs. But I cautioned him, because as you convert from a conventional IRA to a Roth IRA, that counts as ordinary income. So again, in this first 5 years, he has to manage that so that he doesn't, in fact, jeopardize his qualifying for no capital gains taxes and his dismissal or forbearance on property taxes. So he's got some management there to do, but he's in a wonderful position. He then sees, after 5 years, he qualifies for Social Security. He also has a small pension that, because he won't access it until he is 70, it will grow, and now he can access the second and third form buckets of money, and that is his Social Security and his IRA accounts. And once he hits 70 and a half, he's going to have to take some required minimum distributions. So we kind of laughed in saying that you have reached a point in your life, you have paid taxes all your life, and there wasn't much you can do about it. But in retirement, there is something you can do about it. And rather than going to work every day, spend a little time on educating yourself on our tax code and keeping your taxes down so that other benefits come your way. So then the next thing I talked to Steve about was, what could he do that would fulfill his life and quite possibly give him some satisfaction in his retirement? Well, he is in an industry of people who come in and need guidance and knowledge. And he said, I used to do something like that, and I really enjoyed it, but I've been moved into another area. And so I said to him, why don't you and your wife's head together and see if you couldn't create some sort of a consulting firm? He said to me, I can't do what you're doing. I'm an introvert. I would never be able to get in front of a camera and create a YouTube channel or something of that. Maybe he said I could do a podcast. I said, well, you don't need to do that. You have access through your industry to people coming into the industry who possibly need guidance. You have a wealth of knowledge. I'm going to assume he's been working for some 40 years. You have a wealth of knowledge, and you should use that knowledge to help people. And as you go into it, don't go into it from the point of view, how am I going to make money? Go into it from the point of view as, how am I going to help other people? And the money, the monetization of that will come to you itself. You know so much that other people would like to know. You just create a means by which you can share your knowledge, and the monetization will come your way. Someone will come to you and say, Steve, have you ever thought of this? And it'll involve monetizing. Or they'll come and say, could you bring what you bring to the table to what we're doing, and we'll compensate you accordingly. I also suggested to him, he says, well, when I was thinking about things of that line and real estate and rental property, I always got concerned about, well, yeah, but what if somebody falls down on my property and they sue me? And I said, well, that's what a LLC is for, a limited limited liability corporation. And I personally believe everybody who goes into retirement, who believes they want to do something entrepreneurial, the first step you have to do is Google limited liability corporations. How do I set up a limited liability corporation? In essence, what a LLC, limited liability corporation, is a separate structure, a business structure, a separate tax entity that basically says this is what this limited liability corporation owns, and that's all it owns. Anything outside of that, like my house, my brokerage accounts, my automobiles, that's outside the corporation. And if you want to sue me, you can't get to that. Every doctor has a limited liability corporation. Every dentist has a limited liability corporation because they want to separate their personal assets from their corporate assets so they aren't subjected to lawsuits or whatever. So the first thing you do is set up a limited liability corporation. It'll cost you about $200, and then it'll cost you about $200 a year. But what this then does is create you a tax entity that gives you the ability to expense items against any income, or just to create a loss, which you then carry over to your individual tax return, and again pushes your adjusted gross income down. To give you an example, we went to Nashville last week, and we shot that video with Steve Farmer. We stayed in the Hilton Hotel right downtown next to Broad Street, a wonderful hotel. We ate in some nice restaurants. Nita had a magnificent milkshake. All of that is a business expense. And it's a business expense because we went there for the sole purpose of shooting that video. And that video then is put on my YouTube channel. I will monetize it, and it will make me money. But I had to incur expense in order to create that video. And thus, it becomes an expense item on my tax return. Is that a good thing? Yeah. For Thanksgiving, we will go and spend 2 weeks at the beach. And our children live down there, and we will have a wonderful time with them. But every morning, I will go out and I will shoot at least 1, maybe 2 videos. So that trip down there is not for celebrating Thanksgiving. It is for creating an atmosphere and creating a knowledge base and sharing both on my YouTube channel. So the cost of going there, the gas, the food, the rent on the house that we're renting is all tax deductible to my limited liability corporation. This is what retirement's all about. It's not sitting on the sofa and watching Judge Judy and drinking Cokes and eating Twinkies. It's about sharing your life with other people so that their lives can be better, and creating an income flow and creating an expense flow so that you can achieve your number one goal. And that is make retirement the best half of your life. That's what I'm doing. As I told you, there's some other things involved, your health and your gaining of knowledge, but this should be the best part of your life. You worked for how many? 45 years. Most of us graduated from college around 20 and then work for 45 years, 45 years. Now is the time to reap the rewards of your hard work, not to just sit down and wait to die. No. This is the good part. This is the good part. So my job as the host of Best of Us in Retirement is to share my knowledge and my experience. I'm not going to throw numbers at you. There's other YouTubers who do that. I want you to give you the benefit of my knowledge, my experience, and then learn from you. So this is my invitation. If you have an interesting retirement situation and you'd like to talk to me about it, send me an email. You can find my email address and send me an email. And then if I feel it can benefit the rest of the world, we'll share it. Okay? That's Best of Us in Retirement. Let's do this together, and let's enjoy this second half.